Hello, Warriors. I'm inviting everyone to a 3-drive party. Who wants to go? Hi, Glenn, Patrick, Hugo. How's everyone doing? Hi, Ryan, Sinatra, Kay, Laura, how are you? Okay. Good. All right. So, why don't I start off with Ryan? Kind of an ugly candle here so far in Euro. Does it have another low in it with EG under pressure again, buddy?
I don't know. We could be seeing a bit of a fix in the month stuff going on in the quid because the pound's been a little bit bid into the hours. James has been noting in our chat room, particularly this hour we're at right now. So yeah, we might be that might be in the month stuff. The euro itself, we've had a 20 pip range yesterday. You know, has it stopped going down? For the moment, the last few days, it stopped going down. Does it mean it's going to continue to stop going down? Is another question. You know, we may have stepped up off the lows, but we're still making lower highs, and that's still a worry. But it's really tight unless we can get above 108.30 and then 108.70. The bearish pressure remains, in my opinion.
Okay, I got you. Bearish pressure never relented in the commodity currencies, Aussie, at all.
Bit of a move. We've gone through the 61.8 fib of the August rally at 65.75, which was a bit of a level on its own as well. So this one's, I don't know why Aussie's looking a bit weak. It's looking a bit weak on the crosses as well, for example, versus the Kiwi. And that comes as we had some potential China stimulus news that saw copper getting the lift up, gold tapping the highs again. And Aussie's not following, so that's a bit of a strange one.
Okay, this was kind of a strange one yesterday with the market, you know, kind of being just up a shade was what the Russell did yesterday, was up like 35, but it could still be a failing rally here. I'm still looking for a correction in the S&Ps to about, a little bit lower, like, maybe 680 or something like that. I think we talked about that yesterday with Blake. So risk doesn't look good. So we're waiting on the BOJ. So I'll move over to Kay. Expectations out of the BOJ this week?
Shouldn't be moving at all. Dale, good morning. Good morning.
Good morning.
They should not. What is keeping people busy is rather the inability to form a government right now over there. One of the parties already said that they wouldn't work with either side. One of the parties that actually got a bit more votes. They found it necessary to comment on the Bank of Japan door saying that they should go quiet and that wages should go higher. But then they are not going to participate. But yeah, I think as Ryan as well already mentioned, month end, perhaps a bit of flows here with trading value data end of month today. So maybe a bit of dollar activity there.
Any levels came in and yen above the market that are interesting to you?
Yes, I have, and I'm just going to quickly grab back my own stuff, and that is in the mid 154, 4.5, and then on to 155, 155 and a quarter-ish.
Okay.
But if you really think that Japan is struggling to form a government, Bank of Japan doesn't do anything, and the people still continue to trade perhaps Trump 2 or so trade, then 157 is possible even. But officials.
Do you have anything around? Was one of your numbers up around 54.40?
4.5.
Okay, close enough for government work.
Yeah, close enough, I'd say. Yeah.
Yeah. Okay. So here's one of the 3 drive candidates setting up here. Now you don't just sell it just because it gets to a line. You still need a negative signal. This time I think we are going to be under 70. So this could end up being a three drive. The dollar has a similar pattern, but weaker. Here's one, here's two, and maybe we get three, and then you have the kind of the same thing in yields. And actually, look, even though 10-year yields are up here, they haven't been confirming for a while.
We're coming
And
into we're coming into good levels there, around 434, 437 on the tens. Also, we need to keep in mind that we have another, not in the 10-year, but we have another round of bond issuances today. The twos and the fives haven't been impressive to say the least yesterday. So we've got another round today, and as I said, value date end of month. So that careful, perhaps we could see that push up to 435 in the tens. It is possible, and then I guess after that over
that's
to
that's 5 bips here. So I have some kind of line here. I'm wondering
yeah
what
yeah
it was from
yeah
at
yeah
435. So when you look
yeah,
left, that was a big number. Let me just
absolutely
let me
absolutely.
let me just refit auto fits.
Mhm.
Okay.
Yeah,
Okay. So look left. Okay. Yeah. See. I,
yep
all right. So that's what this line was there for.
yep,
Okay. All right.
exactly there.
So there you go. You have some levels, and I think we've covered a lot of different things here. Anything top of mind for you? I mean,
Oh,
goals.
not really specifically today, apart from the value data in a month. But then we are going to run into the job reports, and starting actually today already with the jobs, and then yeah, then we are going into next week, Dale, with the election, and
Oh yeah,
that's
yeah,
going to be a mess.
yeah.
So for me, it's right now it's really short-term trading. That is where I am,
Okay.
and I don't want to commit to any longer-term views. Although well, positions. I have a view, but the positions are not reflecting that right now because anything can happen in between now and the next week and a half or so.
Any view on Stell's not here, so one I
Silver,
asked
strong, gold,
Noke,
no.
USD Noke right there. I mean,
Yeah. It's getting rejected above 11, which is
yeah.
interesting. Bit of a level there around 11.10. This is one that is on my radar, but I'm trying to be ultra patient on that one. All else equal, I would say NOK may be a very decent currency to start the year next year.
Okay, and I know you're a Swiss guy. Looked like was gonna try and come off with the dollar. I mean, that's comparing the rally in Swiss to the dollar. It's pretty anemic, don't you think?
Anemic, anemic. Uh,
Yeah.
I'd love to say dollar Swiss has hit the bottom, and we go up. That's somewhere my kind of what I was thinking, but every time it tends to disappoint, and yeah,
Yeah.
it's just in a range there. Huh? Every
Maybe
time
one
you go
more
up,
high with the dollar. Maybe one more high there. But
Mm.
you want to sell the weakness. So I mean, if it comes down to between shorting the dollar and shorting Swiss, Swiss might be the
Mm.
preferred short. Do you think?
No, I don't know. I mean, it all depends how risk reacts. It seems that Swiss is now the one that is held back in the currency sphere, more on risk, reaping the positives from it, despite having like very low inflation, very low interest rates. I have a hard time to buy Swiss francs. I must say personally.
Okay. Just wanted to show Airbnb because it's part of the theme of our guests that we have coming up at the bottom of the hour, Melody Wright. So if you guys own Airbnb rentals, you're going to want to hear it. One thing I noticed, and this morning's the first time I pulled it up, is that, with all the strength we've had in the market, Airbnb doesn't look so good, does it? So, this may be a way to play what Melody sees coming down the road next year. So if you own real estate or you own your own home or you have rentals, you're not going to want to miss this interview. Keep an open mind. So I just wanted to let you guys know that, let's face it, most of their net worth is in their properties, isn't it? So probably a good.
And a lot's making it into the stock portfolios in recent years with this with obviously the rise in equities. But you know what'll be really interesting is ask her, Dale, what like the percentage of of second homes are actually Airbnbs. I believe the number is somewhere around 8%, if I'm not mistaken, or yeah, something like that. Those are like interesting statistics because I do believe that, I mean, as we are eventually going to see some sort of recession here in the US and probably globally. And the first thing that's going to go is, it's secondary
Vacations.
properties, not your primary residence. It's going to be, your cabin that you rent out, or your second home in the Sun Belt or whatever it is. So it'd be interesting to see how much of the market that is. I don't think it's going to be a huge impact personally, but maybe in my neck of the woods where I live, but not necessarily around the United States. But it'll be interesting to hear what she has to say, so make sure you all stick around for that.
Yeah, because I mean, let's face it, people have been calling just like a stock crash, another real estate crash. I mean, you had people hitting the sirens on that during the Fed tightening regime, and it had no impact. In fact, prices still continued to drift higher in many markets. But we'll talk about the changes that she sees. And she also is an expert in the mortgage part of the business too. So that's the credit is part of the scenario. So anyway, Blake, you looking to do anything today? I just don't see anything that compelling. I'm going to wait for 3 drives here in the end. Maybe this wedge will, once I short it, it'll turn into a throw over, But
Yeah,
that's why you wait for them. Go ahead.
Well, no, I was just going to say, I think a lot of these moves might be, as Ryan mentioned, it might be, as we're coming to month end.
Yeah.
And so that's bringing in a lot of, some dollar buying. Equity markets are feeling a little bit pressured this morning. That could be funneling some of this dollar buying that's coming in. Euro's weak, but we're at support. So that's another thing, when you look at the euro, we're actually at triangle support right now, as we tweeted a little while ago, and we're near such a major trend line.
Yeah.
You miss Twitter, don't you? Here, I'll show you what's going on, Dale. Just
go ahead. Go ahead.
You can also inside ForexAnalytix. Whoops. Yep.
Oh,
you can
yeah.
go right over here, to the updates timeline. You can see it as well, but you can see the euro's in a triangle consolidation. We're nearing support, really critical support as far as I'm concerned.
I don't think it's going to break down.
Yeah, that
it could, but I don't think so.
Maybe, maybe not. I mean, this is the pretty long-term trend line that comes in here. That goes all the way back to October of last year. So, I mean, it's a pretty important trend line that we're coming into. But I guess the flip side is, and the other question you got to be asking yourself is, why would I be buying Europe right now? Or should I be buying Europe over the US? I mean, we have a lot of important data this week. And I'm playing the euro on the long side just from a technical perspective, and I don't like it. I mean, I'm down 9 pips. I've been up 10, down 9 for like the last like few days. It's not a pleasurable experience being long the euro at the moment. So
what's a measured move if we break out either side?
10 pips.
10
there you go, Ryan. I mean, if you look at the longer term, triangle, I mean,
it's just a measured move off that. Yeah.
Well, it's it could be quite massive. I mean,
yeah,
you look at a move to 103, or if we go the other direction, you're going to 117, and with the election coming up, and the chances, and if you guys haven't seen it, I mean, here's this is the betting markets. Trump continues to blaze higher, almost to the assassination attempt levels, which in turn has actually caused, in my opinion, it's caused Bitcoin to break out, because there's no other. I mean, some of you will tell me there's all sorts of reason to buy Bitcoin, but I don't. I think right now it is truly a Trump driven trade. Bitcoin has broken 70,000. We're nearing 72,000. I mean, this is the big, as we've mentioned a couple of times, the big cup and handle pattern on a weekly basis, which eventually points to eventually points to 100,000. That measured move from here to here takes us from to
120
to just over 100,000, 105,000 or something. So, and with the reality looking like Trump could take the presidency for a second term, that seems like that's logical, which also suggests that if you're short dollar MEX, you got to be a little careful here, because the dollar MEX could make a move, which I've always thought it was going to make a move ahead of the election, which seems logical to me. It seems like I mean, if I was short dollar MEX and I saw Bitcoin breaking out, I was looking at the betting odds here in the presidential election, I wouldn't want to be short dollar MEX anymore. So it seems like it's going to make a move.
You've been on this US dollar MEX since May, June period, from the lows. So you've milked it pretty good, haven't you?
I've played it pretty well. Yeah, I've played it pretty well. I'm not long right at the moment, and I've actually played it on the short side a couple of times over the last week. Just like, every time it knocks its head above 20, I'm kind of been on the short side a little bit and kind of playing both directions and trying to buy dips. But I don't have a position right now, but it feels like it wants to break out. I don't have a position at this point. I just want to buy it on a breakout if it goes. I'm just constantly waiting for that. So it looks like it, it looks like it might. Anyway, and then you can look at as you pointed out yesterday, Dale. Here's DJT.
Look at it, it's getting parabolic.
Oh, I mean, it's up 20% pre-market. Pre-market, it's up 20%. I mean, that is truly a Trump trade, isn't it? So anyway, so let's ask Ryan. Ryan, what are you looking at today? I mean, why is the sterling so strong ahead of the budget, which is going to be released tomorrow? And by the way, if you guys don't see it, it's got a little channel and inverted head and shoulder pattern. But Ryan, what gives?
Well, it's suspected that we got a bit of month-end flows going through this. It's D-Day tomorrow, so maybe the market's a little bit short as well. Has been, pound's been dragged low over the last couple of weeks, so maybe it's just a little bit of squaring up ahead of tomorrow. In case a lot of people think this budget's going to be bad, which obviously then leaves the bigger price risk is if it's not. So if the market likes the budget tomorrow, then we're probably going to get a big rip in the quid. I reckon probably see 131 perhaps if it's taken positively. Maybe euro sterling through that 83 figure finally. But for now, just watch the clock because we're getting moves sort of 10 minutes into the hourlies.
Yeah. Do you think that I mean, is the worst already priced in for sterling at this point?
No, not necessarily, because we've heard, the super nuts of the budget, but it doesn't mean there's going to be things that we haven't heard about. And there's still things like capital gains tax. We don't know what the number is. It got touted at 39%. It'll probably come in lower. But does it come in a little bit lower or a lot lower? So there's still headlines to come that's going to move the quid on those things, and as I say, maybe stuff we haven't heard of yet. So it's not over yet.
I hear they're going to tax intraday profits, unrealized. I'm kidding.
Make them first.
Well, they are. One party here is talking about taxing unrealized gains in people's stock portfolios.
Yeah. But that's another
know,
thing for Bitcoin as well, isn't it? The rally in Bitcoin, because Trump's saying he's going to, you know, scrap, is it income taxes on Bitcoin? Because he says it's like money. So why should you be taxed on money when you pay for stuff?
Yeah, I mean, well, you know, so I was listening to something yesterday, and it's so obnoxious. I mean, and God, who was I listening to yesterday that I was listening to an interview with, I think it was like David Rosenberg, Rosie, you know, for those of you who he is. I
he's
think
been
it
a
was
bond bull and you know, America economic bear.
Oh God,
And,
yeah. I mean, he's like a bear's bear. You know, like if you're a bear and you know, if you're a doomsday person, just go listen to an interview with him. But I did hear him say something that was funny, and he goes, you know, listening to these two, you know, presidential candidates is like listening to you know, somebody who's, you know, um high school, you know, running for you know,
class president.
You know, we're gonna have root beer in the drinking fountains, you know,
Yeah,
if you elect me, you know. And all the bullshit that we're hearing from, but it's both sides, guys. It's not, you know, one or the other. You know,
it
my
is
wife,
both.
she comes to me, she goes, "Oh my God, wouldn't it be great if veterans don't get taxed and we don't you don't have to pay taxes anymore?" And I'm like, "Come on. I mean, seriously. Like you really believe that? You actually believe that?" You know, and I mean, again, this is just, you hear it from both sides. It's not
Well,
just,
you know, your wife bought your story.
yeah, right. Yeah, there you go. True. You
All
know,
right. Anyway,
there is a story. Actually, I want you to bring this up to Melody, and this is, I think, really interesting. Blackstone is now the largest corporate landlord on
yeah,
earth.
yeah,
They have over 300,000 homes in the United States.
yeah,
Billionaires and corporations have bought millions of homes and either raised rents or left them as empty investments.
yeah,
There are 16 million vacant homes, 28 for every homeless person, which is just a staggering amount. But what's more important about that number is just all of the real estate that's owned by corporations that, I mean,
yeah,
you know, eventually, I don't want to say eventually, but corporations are not going to give up these rental properties. I mean, unless it's a forced liquidation, there's just not going to be, that's not going to be the case. So anyway, I think it's really, you know, it's home ownership for individual Americans. Or it's becoming, you know, that American dream of owning a home is becoming more distant, you know, reality than ever before. So it's something that I think you should be talking or asking Melody about, you know, as especially for future generations. It's going to be more difficult. Anyway, hey, I want to point
not
out
really.
Euro is at triangle support right now.
Yeah.
Like literally, if we're gonna bounce, it's going to be somewhere around here. But with all this month end stuff, I'm not sure if that's going to happen. Kman, wanted to ask, what's on your radar today? What are you?
Yeah, well, what I've said already, bit of dollar yen. I've continuously tried to find levels to buy a bit of gold just to play it on the long side going into perhaps end of the week or so. But there's no dips. It seems the Asians are still extremely fond of gold. But yeah, I'm only trading very short term now. As I said, posted some stuff in the room regarding month end. Could be, let's say, the opposite way of what we are seeing right now today on value date. So yeah, perhaps looking at a few things. But really, it's short term scalping right now, Blake.
Yeah, it is. I mean, and remember, we are a week away, exactly 1 week away from the US presidential election. Things are going to get very choppy, very thin as we get in towards the end of the week. And on top of that, we've got a crap ton of data coming. If you look ahead at the calendar, and you start with today. And by the way, we do have Google earnings after the close today. We have some data coming out, you know, with Case-Shiller house price index, which, you know, hey, you got Melody here, which is perfect to talk about some of this stuff. We got is we Canadian retail sales today? No.
No, jolts and consumer confidence.
Jolts. Okay. And then what do we have for Canada tomorrow? Canada's got something important. Ah, shoot. I gotta
No, we got a couple of speakers in Canada today. McClem and Rogers are talking.
Oh, okay. All right. For some reason I thought they had
I think we had the retail sales
anyway.
last week, didn't we?
Yeah, it was definitely last week. But anyway, so today we got jolts, and then we have Aussie CPI tonight. Tomorrow we're going to have ADP. We have advanced GDP in the US. We have obviously the budget out of the UK. And then we have the BOJ Thursday morning. Then we're going to have weekly unemployment claims, PCE, Canadian GDP. That's what I was thinking. That's on Thursday. We have the employment cost index on Thursday, and then we have jobs report on Friday. So, and then we have ISM after that. So it's going to be very, very busy. I'm sorry?
PCE Thursday. Did you mention PCE?
Yeah, I did. Yeah, we have PCE on Thursday as well, and next to Canadian GDP. So a lot of data coming out, and the markets are going to start to really thin out, from a liquidity standpoint. So just be really, really careful as we go into the latter half of this week. I think it's going to be, kind of crazy. And like I said, the euro right at trendline support here. It feels bearish. I mean, you look overall on the euro, and I'm long. So just so you guys know, I mean, I'm out of the money a few pips, but I've been trying to maintain a long position through this. But overall, I mean, this is a pretty bearish trend and very big trend line support coming into play here. So anyway, what else did I want to mention ahead of well, Kman, you mentioned gold and silver. I mean, silver pullbacks. I know everybody's been waiting for like this, 32.5 level, but man, I mean, we're not even able to break back below $33. So that's really freaking strong here in silver, and gold, holding up as well, breaking through that pennant to the upside. So it's looking so good. Yeah, I don't know. So Dale, what else are you thinking going into the middle of this week?
Same thing. Well, I have some 3-drive candidates. I just have to sit on my hands till it happens. And not try and anticipate it. So it's in the dollar. Still think the dollar's topping, even if there's one more jiggle in the Dixie. And looking at, see what happens with the yen. We could have a 3-drive there. And I do think that we're close to at least a bear market rally in TLT, and yields to come off to about 390 on the 10-year. So
390. All right. Well, let's talk about that here in a second. There's been some Iranian headlines too, hasn't there, Ryan? About they want to retaliate, and isn't that going to allow for crude oil to fill this gap?
I don't know if it's enough to fill the gap. They're talking about hostage deals again, and an Egyptian proposal for a ceasefire, 2-day ceasefire, and small prisoner swap. But then, they come out and say they're looking at that and deals, and then they come out and say, well, we're going to retaliate for the retaliation. Israel's going to retaliate for the drone attack on Netanyahu's house, and then Iran will retaliate to that. So the ping pong is just ongoing. I think the bigger military thing is what's going on with you guys threatening Russia with no new limits on Ukraine weapons if the North Koreans get pushed to the front line. I think that's the next big escalation on that side, and could see risk taking a bashing over that.
Israel took out their air defenses. Okay.
Yeah.
So if they're just waiting, maybe even hoping that Iran retaliates.
Well, they said that. They said that overnight. They said we knocked out the defenses, which allows us to attack again if we need to. So it's still bubbling.
It might be different targets, like nuclear facilities next time, or Karg Island. Anyway, they have look. They didn't lose any planes before they took out the air defense system. So anyway, I think they both. It's not going to stop.
No.
I just don't see it stopping.
But
And you're
there's
right.
waves, isn't there? There's waves. Yeah. There's big waves and little waves, and
it's been going on for 4,000 years. Why is it going to stop now? And you know what it reminds me? You know how people say, well, it's it's you're too old. It's too late to start something new. You know where I'm at? It's too late for me to stop. Okay, so time flies as a trader, and it's too late for me to stop. So I'm going out with a bang here in whatever is left in my trading career.
You know what I just saw? I'm sorry, I have to say this out loud. I just saw a falling star just a moment ago
when
outside of my window.
Oh, yeah. Oh, did you make a wish?
I did.
You can't tell us.
Of course I can.
Were you wishing that Melody Wright and I could start our interview on time?
Yeah, that would be nice. But before I do that, you talked about yields.
Yeah.
I mean, look at this ascending wedge in the 10-year, and the 10-year's at highs right now.
Yeah, we'll get over through. Yeah,
we might. I mean, you know, but that's a pretty big move in the 10-year, which is complementing this dollar strength that you're seeing this morning. That's, you know, the dollar's come out of its shoes a little bit this morning, right? So
yeah.
So there you go. So Dale, you have Miss Melody right here, and you guys are in for a real treat. Like I said, if you are if you're in the US and you own real estate, you're going to want to stick around for this one. But also if you are you know, just want to pay attention to what's happening in the US real estate market, because it matters. You know, consumers, they haven't buckled yet because their stock portfolios are doing well. Their homes are still maintaining their values as of now. But to hear what Melody has to say about the end of this year going into 2025 is going to be really interesting. But before I let you go, remember, we have the election is exactly 1 week from today. So if you take a 10-day trial with ForexAnalytix, you can be in the most active, one of the most active chat rooms in the markets when we're talking about everything
that doggy
that's moving. What's that?
Scroll back. I want to see that doggy. Who's the dog there?
Oh no, that's a cat.
A kitty.
Yeah, but you can, Dale, you have access to the chat room, so you can go back and see that whenever you want.
All right.
So make sure you guys, you know, download the mobile app so you can get all these updates and patterns in play and everything else, you know, right at your fingertips. So Dale, pass it over to you. Have a great interview with Melody. Melody, welcome to the F.A.C.E show.
Thank you so much.
Yes, right. Melody, great to talk to you again. After talking to you, I felt I really needed to get your message out to as many people as possible. You know, Melody Wright is a writer, and she's a strategist and a GFC 1 survivor. And Melody, why don't you take us back to, I know you were going to school full time during the Great Recession, and you ended up, and you were working, you had to support yourself while you were in grad school, and you ended up in, you know, being thrown into the fire during the Great Financial Crisis, which you call number one. So why don't you, you know, welcome. I'm glad you. Thanks for granting this interview. Why don't you tell our audience a little bit about what you experienced then and some of the similarities to what you're seeing now?
Sure. And so I fell into the fire in 2006, September of 2006, right before, as things were starting to deteriorate and it was starting to become obvious. And our private equity buyer, Cerberus, came in and needed to understand how they could get a purchase price adjustment because they realized they'd paid way too much for our company, which was known at the time as one of the largest subprime mortgage lenders. However, we also had a huge agency book, and that's important, and I'll talk about that later. But essentially, you know, we had, in October, we had a party, balloons were falling from the ceiling, and then the next thing you know, we were laying off thousands of people. You know, doing massive write-downs on our assets, our securities, our mortgage servicing rights. And it was just, you know, really, we were on the #1 list for ML, Mortgage Lender Implodometer. for several years. But in reality, our subprime book was only about 17%. And that'll be important as we get later in the conversation. So yeah, it was just absolute chaos. But because so many people were getting laid off, it was an opportunity to learn the business in a way that I'd never get that opportunity again. I was in corporate finance. So we were at the tippy top, working with the executives and all the business segments. And I got to know that business from both an origination and a servicing side. And the servicing side is one people don't talk about a lot, but it's very important. The servicing is just the taking of your payments. And so we rode out that chaos until ultimately we had to go into bankruptcy. But that was much later than people imagined. We filed bankruptcy in 2012. 2010 is when delinquency actually spiked, but it stayed high. But from there, I just went off to, once kind of the bankruptcy was over, I went off to a whole bunch of other non-bank originators and servicers to try to help them, to adhere to Dodd-Frank. And I got a ton of pushback. The big five, Chase, Bank of America, Citi, GMAC, and I'm always forget one, but, they got into a whole bunch of trouble and they had to do everything exactly right. And that's when, Dodd-Frank was enacted. So when I went out to the non-banks, because a lot of the lending was being pushed out to them because Basel III requirements were just too onerous for the banks, to try to help them get up to speed with Dodd-Frank. And they really never could do that. And I began to wonder, like, okay, maybe it's just these smaller non-banks. But what I've come to now realize is that in reality, no one in the industry ever fully adhered to Dodd-Frank. They took out the DTI, or debt to income requirement, back in 2020, I believe, or 2021. And so the industry never reformed. But what happened is lending kind of went, that risky lending went from the private market to the government market. And so 85% of what's originated in mortgage loans today are actually delivered to the GSEs, or government-sponsored enterprises, or agencies, Ginnie Mae, et cetera. And so the government came in, and with FHA, which was supposed to be largely a first-time homebuyers product, they essentially doubled that. And you wouldn't believe some of these credit scores. And so they are essentially the subprime of today, and they're about 15% of the market. And ultimately, FHA is why my company went into bankruptcy. It wasn't even subprime. We wanted to get into FHA because you got better points on the upfront.
Oh, of course.
But no one ever
overages,
yeah,
right?
Yeah. And then nobody ever realized you cannot find one person in the entire mortgage industry that can give you a life alone profitability. Can't do it.
Yeah.
As they look at origination and servicing very differently. Anybody that services FHA would not, in a default time period or cycle, would never ever want to be in that product. So, so what happened? I kind of went out to fintech. I decided, okay, I want to build technology to fix things, because you wouldn't believe these systems at the banks. They're still blue and black screens, or blue and green screens. Walk around PNC today, you'll still see that. It's all of them. So I tried to do that. The industry really didn't want that kind of change either. So I really started diving into macroeconomics and really trying to understand that again. What was going on? Why was the stock market up so high? And as I was diving, I started reading things about the housing market that didn't make any sense. And so I got out on the road, especially this inventory that there was, or this narrative that there was no inventory.
Yeah.
I was like, what are you talking about? That makes absolutely no sense.
We're still hearing that.
Oh, we are still hearing it. And we'll still hear it till after the election. It probably by June of next year, hopefully, I don't have to listen to that garbage anymore, because it's everywhere. But, I went out on the road in January of 23 and went all over, kind of these Sunbelt states, and looked and saw just, and I'm not exaggerating, at least 4 times as much inventory as was being reported. And these empty new build sites all over the country. And that was not what we were hearing in mainstream media. And so when I got back, I just kept digging and digging into the data and trying to understand how everybody could get it so wrong. And that's when you kind of realize it's willful and to some degree. It's just it's a narrative. The National Association of Realtors is the largest lobbying firm in Washington. I mean, it's just, kind of that simple. So that's kind of trying to do it short, Dale, because I know we don't have a lot of time.
No, that's great. You know what? There were a lot of people talking about bear market, another crash in housing, especially during the Fed's tightening regime. Everyone was saying housing crash down 40, 50%. Where was your head at during the Fed tightening? And has this taken long? I know when I trade, I'm always early. And things always seem to take a little bit longer to play out, just like in the movie Big Short. Things were falling apart and they weren't getting paid. They were actually losing money during that time period. So when did you think this was going to happen, and did it take longer than you thought to have these conditions?
Yeah. So, it always takes longer, Dale. I'll just say that really quickly. But to me, I always had a long-term thesis. There were a lot of people out there that said, housing was going to crash overnight. Now, with the way that prices ran up in 21, I did think we could potentially see a pocket, and we might see that pocket in 2025, where you saw kind of a more precipitous drop than you did back during the GFC, because essentially it was 2 years we got up to that level. And prior to the GFC, it took much longer. But where my head was at, and I love that you're talking about the 10-year. It's my favorite thing to watch. This time period right now reminds me so much of what happened in October of 2022. And that is when I truly, all the signs were there. The 10-year was kind of screaming up. And that is terrible news for the builders. That's terrible news for people in mortgage finance. And so, really, as we entered into 2023, I think everything was turning. You could see it all. Everything was turning down. But then what happens? We got to March of 2023, bank failures and the BTFP. And I really believe that just gave us runway, sentiment, like a stronger, okay, they're going to be there to backstop us again. So let's go out and let's gamble some more. But I do. So I would have thought I feel like we're exactly back at 2022 right now. And we're turning. And I often say, housing, the Titanic takes a very long time to turn. Yeah. But once it turns, it sinks a lot faster. And so I think we are actually rounding the corner to seeing that distress. We're at lower sales than the GFC right now. So.
Okay. And do you have a view on the 10-year? Are we going to go challenge these highs that we had at 5%? Because this surprised me, Melody. If you watch yields, this measured 360, but when they cut rates by half, I thought, well, maybe it'd be a sell the rumor, buy the fact, but this strength has surprised me. The move in the yields, move in the dollar. What are you thinking here with yields?
Yeah. So, I have to be honest, I wasn't as surprised, and I've been studying them as well. And I just, so Dale, I don't know, but my feeling is that they may persist at these levels for a little bit of time. I know folks believe we might actually be entering an uptrend. I'm not exactly there yet, but there is something happening. I don't know what it is. If we're rounding the corner to year end and there's liquidity management going on and there's collateral shortages, but there's something up. And I just have a feeling we may sit here for a little bit of time. But this is you're the trader. I'm the observer.
All right. All right. Well, we were talking about during our webinar about Blackstone, and they're the largest corporate landlord. They have 300,000 houses. A lot of them sit empty, and people think that they would never liquidate. Isn't it possible that we have a situation? I mean, I've heard of BlackRock selling things that weren't working, like commercial office buildings, handing back keys. So is this going to be part of the supply scenario?
It's already happening. If you look at San Antonio, which has very large institutional ownership, they are fire selling down there because there just is so much inventory. And so I went to a specific neighborhood where it was actually a F.A.C.E, which is Cerberus. They never learned a thing because they got a government bailout. And you could see they don't get the homestead exemption. And so their tax bill was $30,000 because property taxes have gone up exponentially, as has insurance. And that just, those carrying costs don't make sense anymore. So it was in a nice single family neighborhood and they were fire selling it. I mean, they were just dropping the price. And so guess what happens to the rest of that neighborhood? So absolutely, Dale, it's happening in Florida, it's happening in Texas, and I guarantee you it's happening in other locations. It's just so hard to see it because you have to go to the county records to truly understand who is selling. And that takes, we have over 3,000 counties in this country and they're not on a standard system. So that's something I learned it's a lot of work and it takes a lot of time.
Yeah.
But they're selling.
All right. And you said that the hurricanes and what happened in Florida and almost got to where you are. We know what happened in Tennessee, that it changed everything and that it was going to speed up the scenario that you're talking about. Why?
Yeah, so I've been ever since we've been talking, I've been digging into the numbers as well, Dale, and you can already see it. And so Houston and the areas impacted by Beryl are really good case study where you could look at delinquency prior to Beryl hitting around the 5% mark. Now it's at the 6.5% mark. And that only happened in July. And, you know, I managed default. I forgot to mention that during the crisis as well. And you know, that Sandy was huge. The entire country peaked in delinquency in 2010. New Jersey did not until after 2012, and that was Sandy. And we were still dealing with Katrina issues. So in this specific case, even in Florida, you had all these claims are getting denied, but most people in this country don't have flood insurance. Only 4% of it, according to FEMA, where 99% of counties flood. So these folks they're not going to have any insurance. They're not going to have the right coverage. And as well as, and a lot of these were short-term rental, Dale, like a lot of these and on the Blue Ridge Parkway, Airbnb, Vacasa. And so this is cash flow that's gone. So it's not just that people are losing their homes and then purchasing power because of the loss of that home and then having to find somewhere else to live, but it's also just the amount of small businesses in places like Asheville. And it wasn't just Asheville. There's, almost hundreds of little towns along the Blue Ridge Parkway that were impacted. And so this is going to be a huge economic event. And, Milton, I think, is going to cause a mass exodus from Florida. Just, you had Helene and Milton, and some of these people were hit by Debbie as well. And so that's what I've been really diving into these counties. And you can already start to see the distress in the counties where Idalia and Debbie hit. And now we're about to see the impacts of Helene and Milton. And delinquency was already ticking up. It was up 3.48% month over month already for mortgage delinquency. When we talked, you said that inventories are climbing in California, which is, where, people can leave and buy 3 homes if they sell their one house in San Diego. So, could it be that the states that, the bigger the bubble, the bigger the pop, the larger the price increases that we had that were parabolic, those are the ones that can drop more than 50%? Yeah, they could. They absolutely could. But even I live in a tiny little town in East Tennessee, and you can see the speculation here. There's new build sites everywhere that are empty. And so I believe it. So yes, in those crazy areas like Austin, where we've already seen declines, where we've had that they will be impacted more. But this is going to really impact nationally. And of course, you always have your little areas that are safe, but people have been telling me all year, Washington, D.C., for instance, was safe. It's not. You can see it right now. It's happening already. Inventory, price declines. And out in California, the other thing people don't think a lot about is foreign buyers. Yeah. And foreign buyers are a big part of California and Florida.
They sure are. They come with suitcases full of money from China.
Correct. Well,
I
guess
sold
what?
one. Yeah.
Yeah.
Oh, yeah, they can't get out. They can't get out now with their suitcases.
Right. And so it's down 26%. It's down 20. They can't get out with their suitcases, Dale. And some of them need that money. Some of them are hurting so badly. They are selling properties. And so I think California is about to be very surprised because everybody kind of thinks that market is immune, except for like San Francisco. But now, San Francisco's back, even though nobody really wants to go there. But because of, AI and things like that, which, I worked in technology. There's going to be some great innovations, but it's going to take a very long time before they make money. And so this, in my opinion, is also a bubble, which will impact the California market as things start to deteriorate, as conditions in the stock market, because I do believe there's a lot of fraud around NVIDIA. There's a lot of things going on. And I think really after we get past the election, that stuff is going to become more apparent.
Okay. That's interesting. When we talk about Airbnb, I actually looked at a chart of Airbnb and they showed dots. I think you showed the dot of Southern California, and the dots cover up the whole map.
Right.
Okay. So
that's right.
I was thinking about, as a strategist, which you are, it's not going to be the same play it was last time. We don't have those CDOs or CDSs. We don't have the derivative situation we had in 08, do we? Or is that still the same play that we had?
I think we still have a lot of that rehypothecation. I think, unfortunately, too, we've got some crazy different types of securitizations that are happening, and the CLOs. And I think they've just they're calling it a different thing. But it's the shadow banks. It's hard. This stuff is so hard to track because a lot of it's off balance sheet. But I absolutely believe we do have that. We still have that rehypothecation, and it's probably worse. And it might not be in a CDO, but it's in a CLO instead. And so and even in 2015. At the end of The Big Short, they said, and now they've come up with this product, the CLO, collateralized loan obligations. Yeah.
All right. So that, if you're sophisticated, that might be a way to go. It takes a lot of sophistication to know to trade those kind of instruments.
Absolutely.
So I thought I'd bring up the poster boy, and when you look at this chart and compare it to what the general market has done, the S&Ps, and so we topped at the end of 22. Since that time, the Dow, NASDAQ, everything has screamed into new record highs. This would be analogous to about 4,800 in the S&Ps, and we're trading 5,800. Could this be the play? Looking for shorts in Airbnb, or strategists? How are you looking to play it? And if there isn't a way to take advantage of it, what's the best way for people to protect themselves from what you see coming?
Yeah. So this to me, Airbnb never made sense. Just from their model was just to add inventory, and what they did was kind of dilute their client base with that, so people couldn't make money anymore. And really, they have been riding on a wave of narrative. This company may exist in the future, and I say may, but they've got so many headwinds right now, regulatory headwinds. People are very angry, and so all over the country, you've got initiatives to regulate this. People want their housing back. And so, although this isn't an investment advice, I would say this company it's based on nothing. There's no foundation, and they're going to have a lot of trouble in the next 24 months.
Okay.
And then to stay safe.
Yeah. Okay. And to stay safe, what?
Yeah.
Should people sell their house and rent? Most people would be afraid to do that.
Yeah. So most people, this is what I would say, your home, it all depends on it. Do you look at your home as an investment? Do you look at it as where you want to live for the next 15 years? And if it's where you want to live for the next 15 years and you're happy there, you don't need to do anything. I mean,
right.
But if you are thinking you want to sell in a year or you have investment properties, what I would recommend to everyone right now is just to list and just see, because Fannie Mae did an appraisal letter where they talked about they think 55% of appraisals were inflated. And your Zestimate is not really based on good math. It's not good comps. And so I don't think homes are worth what people think, and they need to manage their expectations. What's happening right now is you have such a low volume of sales. And the only people that are participating are the top 10%. And so it looks as if prices are being sustained. But in reality, when you look at the list price, and you can find that chart on Fred, the median list price, that's a better indicator. And that has been coming down. It did not reach its former high like the median existing home price did in June. And so list, that's what I would say. But any traders out there that get super excited about the builders and shorting those, we saw DR Horton today. Just be careful. Lennar was bailed out last time. There's a lot of government participation around these builders, and they're all involved in these affordable housing initiatives and grants and things like that. So that would be my only kind of caution, as well as the government's going to try to step in and save housing. It's such a huge part of the market, as we know.
Yeah.
So just always be aware of that. But I still believe no matter what they do, the amount of speculation is not going to, these prices won't be maintained. And then of course, of unaffordability.
Okay. And you talk about the PPP loans, and you talk about the forbearance of people not having to pay something that was tacked onto the back of their loan that also plays a role in reducing the equity that they have. And I was just thinking, I used to look at Zestimates, and they were always high, even when things were good. And I think Zillow's going to have to rename it to Justimates. So you justimate to me about this price. So
I love it.
Here's DR Horton. Yeah, it looks a little heavy. So home builders could also be a play because they won't build or they're what's the bearish argument? Because they're not inventory, they're building inventory.
They're building inventory, and they are at the highest levels we've seen.
Look at that.
Yeah. So there is so much inventory, Dale, and they have been able to do things to protect their margins. That runway is over. And with the 10-year doing what it's doing right now, which is something heavily in their models, that's going I'm waiting for a builder to panic and start selling. They've already had massive reductions in prices with the incentives. You can look at Lennar's 10Q, and they're spending $40,000, $60,000 per home to sell it. So it's just a matter of time, and those borrowings at those low rates are expiring. Those margins are going to go away, and we're going to start to see some panic selling. But like last time, you can go back to a 2009 article from Lennar talking about its tax bailout when they were trying to mea culpa for building too much. They've built 3 times that much now. So they've got a ton of inventory. They have to move it, and that's also going to be an impact on prices. But they've got trouble ahead, but they will go to the government, put their hands out, and say, "I'll help you with affordable housing if you help me out."
Yeah. So there was already a demographic argument for a bear market in right. That the population is boomers are getting older, they need to downsize, and there's an expression that houses don't die, people do.
That's right.
Which means that they're going to be that there would be plenty of inventory just based upon that. Is it true that I was always learned or heard the narrative that it was going to be very hard to replace the baby boomers for demand. But the narrative has been that, the millennials or another generation. Is there any generation that could replace what the baby boomers were to the market demographically?
Not in my opinion, and this will get hate, but the only way you do that is immigration, right?
All right. Yeah.
Like exponential. And so, and the other thing is, Harvard did a study, and what we did in COVID is we pulled forward that millennial demand. And so we've already taken that really the positive from that. And so what you're actually seeing now is reconsolidation. I'm expecting to see the household size kind of tick up where we were at 2.6, per household. We're going to see that go up as people have to consolidate, as well as you have 15 million vacant properties. A lot of these wealthy boomers have first, second, third homes, and it'll be very easy to make a decision about letting one go or selling one or giving one to one of their kids. So, what I never understood, it was true the demographic argument that I was like, how can anybody think that we are running out of inventory? But then you tack on the speculation, and that's inventory has just exploded. As well as quickly, I just want to say, where does Fred get its data for inventory that they populate on their site? From Realtor.com.
Okay. Yeah.
And I think a lot of people have stopped using those official listing sites and use social media. And so there's a whole bunch of reasons why
they're called pocket listings.
Pocket listings. That's right. And in Austin, they made up about 30% of the sales there. So there is a ton of inventory. I've seen it with my own eyes. That narrative is just absolutely, it's just not true. And maybe it's misguided, but at this point, I think NAR is just doing everything it can to prop up the housing market.
Okay. If we have, once we're into this GFC 2.0, is there going to be a way to finance a home after all the carnage? Say prices drop 50%, that it's going to be, you might have lower prices and maybe not a job. That's part of the problem. If we have a real estate break, it's going to affect a lot of people, a lot of their employment.
Yeah.
But say you're lucky and you have a job and you have some money put away. When do you think would be a good time for someone to start coming into it or even buying their first home? Should they wait a couple of years and let the dust settle?
I'm always a fan of being cautious, but if you are really motivated, there are ways that you can do the research and get good deals, because we're about to start seeing a lot of distressed selling. We've already started seeing motivated selling, but we'll start to see distressed selling. And so you can go to county records, you can sign up for something called, not endorsing it or promoting it, but Property Radar, where you can actually get the address of people. I want to address what he just said, but you can get the addresses of people that are in default, and you can actually reach out through like a postcard or something and say you're interested. So there are a lot of ways for somebody who really, really wants to buy to negotiate, get a deal, but it takes a lot of work. But, honestly, it probably is better to wait out at least over the next 12 months to see how this is what the direction is. But quickly, to address what he said about the 25,000.
Yeah.
That Kamala, that has already existed. That has already existed. You can go to Detroit right now, get $25,000 down payment assistance. You can go to California and get $50,000. And that is part of why these home prices have continued to stay high. And so that they gave a ton of money to the states, and that's what every state did. And there is still money left over, Dale. It has not been spent. So that was very disingenuous when they talked about that program, in my opinion.
Okay. Well, you know what? I feel your authenticity when I talk to you, and that's why I wanted to bring you into the F.A.C.E community, so that our community has information, because I say keep an open mind. It'll keep your account open. Well, you have to keep an open, you have to keep an open mind when it comes to something that recency bias people have forgotten 2008, 2009, and they'll say, well, all I had to do was hold on to it and look, my house is worth more. Same with the market. So, this is going to shock a lot of people because real estate only goes up, Melody. You know that.
That's right. I know it.
And the best way for people to stay in touch. I know you have a YouTube channel. What's it listed under?
M3 Melody. And so that's my YouTube and my Substack and my X Twitter handle is M3_Melody.
Okay. Well, if you have a roof over your head, and I know at least people that have many roofs, you need to get this video out to them so that you might be able to help them avoid a landmine.
That's right.
Melody, thank you for being here and for your hard work of going directly to these places and not just trusting what you see on your screen. I really respect that, and I'm so glad our paths crossed, and keep getting the message out.
Same.
Appreciate
Thank you
it.
so much. It was an honor. Thanks, Dale.
All right.
See you soon.
Melody, right, everybody. Okay, that's a wrap. And you could join the team in 10 minutes on the Morning Edge. Everyone, good luck. I see the dollar is exploding, huh? Yeah, okay. So have a great day. We'll see what happens here. And tomorrow, see you tomorrow. Don't just count your pips, count your blessings. Adios.